Your car has lost $25,000 in value, and yet your insurance still costs you the exact same. Today we're going to talk about why car insurance can sometimes feel like robbery, the myths associated with car insurance, how and when to shop, how much you can actually save, discounts on your policy, saving more money, tips to actually structuring the policy, and then finally we'll talk about what I pay and what I recently saved to put it in real numbers. So when you buy a new car, let's say it's $50,000, your car insurance premium on average might be $2,000 a year. They're going to quote you at 6 months, so let's call it $1,000. 2 years later, your car is now worth $30,000, but your car insurance premium, it's the same. It's probably still $2,000 or maybe more. Presumably over this time, maybe you're older, maybe you have a better driving record at this point. This won't matter for a 40-year-old, but it might matter for a 20-year-old. It definitely matters for a 17-year-old. And so they're going to tell you that the value of your car, it's just one component. And they're right. Car theft goes up. The cost to repair is a big one. The parts don't really change, but the labor over time does get more expensive. But I'll tell you what, I have two of the exact same car, a 1999 Lexus LX 470 and a 2015 Lexus LX 570, just the newer model. The difference to insure them is 3x for the 2015. It costs 3 times a year. So while there's all these factors that are involved, a huge component is the value of the car. Some of the big myths around this are that it's going to hurt your credit to shop policies or to cancel policy or to change policies. I don't know how this got out there, but that is not the case. You can cancel 10 days after renewing, you can cancel 10 days after starting a new one, you can cancel 10 days before it ends. It does not hurt your credit at all. It doesn't hurt anything. If they do actually hit your credit, it's a soft hit, so it does not affect your credit score. And what happens, let's say you start at January 1, you end up canceling it February 1st, all they're gonna do is pay you out and refund you for the 5 months that you prepaid up front. So there might be a little gap where you don't have the money and they have to refund you, but it's not a big deal. You don't even have to actually change carriers in order to save. You can just have them readdress it. You can call Travelers or Geico or whomever you use, tell them, hey, I'd like to readdress the policy. They can actually cancel your current one and readdress with a lower cost. The idea that you need comprehensive all year round. A lot of times, especially car enthusiasts, you might have like a seasonal car. You might have a car that you keep in the garage or the shed or wherever and you don't use it in the winter. You don't need to carry comprehensive through the winter. You can actually alter that policy to drop it. That could save you hundreds just in the off months. Now, how and when to shop? I have personally not found a good website to compare a bunch of car insurance. What this actually looks like is you give them a bunch of information, they sell that information, and then they gate most of the actual quotes by asking for your email. And then maybe they email them to you, but it's disjointed, it's a bad functionality, and you are going to get calls from every insurance agent for the next 4 months. And I haven't found a broker that I really like. So I quote direct, it's really easy. The ones you really want to focus on are State Farm, Farmers, USAA, Geico, Progressive, Allstate. You can go direct, just do the same coverage across the board. Don't get too caught up on the different coverages between them because what's going to really matter is your zip code, your area, if they're trying to cover more of your car or less of your car as a carrier. So get a quick quote from all of them and just compare the cost. I bet you there's a $1,000 difference between the most and least expensive one, even sometimes for one car. The big one is just set an annual meeting with your current insurer. They'll readdress it for you. They'll shop it, and they're not going to do it unless you ask. I'm sure there's someone out there who will. I've never met them, but it's very easy. Just ask for an annual meeting. It's standing, it's reoccurring, and you can save hundreds a year without doing anything other than asking them to requote you. It takes max an hour and a half to go between 5 carriers. You only need the big ones. And we've talked about this, but now how much can you save? I just saved $1,000 a year. We'll go through at the end. But conservatively, hundreds a year. And the real cost is when you don't renew this every year. So you wait 5 years, sometimes 10 years. If it's $1,000, we're talking $5,000, $10,000 you save over the life of the policy. And then when you consider homeowners, umbrella policy, any other insurance you might have, maybe you're a boat person or something like that, the cost just gets massive. All right, so discounts on policies. This is a big one. Bundling policies, obviously a huge value. I think this is what gets people stuck sometimes because you have your house, you're like, I can't change the car, the house policy's good. Or you feel some sort of loyalty to your local agent. A really good tip about having a car on your home policy is you only need one car on your home policy to qualify for bundling. If you have multiple cars, especially if you have a car that's older, cheaper, or it doesn't have comprehensive, you can just leave that one on your homeowners. That'll qualify for the multi-bundle discount, whatever they want to call it or brand it, and you'll be able to move your more expensive, newer cars over to a different policy. Pay up front if possible. This one's easy. Paying every 6 months for the auto as opposed to monthly usually saves you up to 10%. Go paperless seems silly, but sometimes literally electing paperless, they have to mail that stuff out to you. It comes at a cost administratively, it comes at a cost of actual mailing, and so you might be able to save a couple percent. Some of these offer usage tracking. So from a usage tracking standpoint, where they plug into your onboard computer and track like hard braking and mileage and usage and all that good stuff, they can raise your policy rates depending on the findings. It's a gamble. I don't know that it's clear cut in those situations. You kind of have to know yourself, what your next month or 60 or 90 days looks like, and decide how that's going to look for you. And the easy low-hanging fruit groups: Greek life, professional associations, military, teachers. You should get discounts. Take advantage. Tips for structuring your policy: insurance policies shouldn't be for door dings, right? They should be for pretty catastrophic losses. They're to prevent you from losing a lot of money, not to prevent you from losing a little money. If you can afford $1,000, maybe every 3 or 4 years, should there be an insurance claim, you should consider changing the deductible from $500 to $1,000, or vice versa if you can't afford it. There's a cost to insurance. Of course, we know that, but actually each line item has a cost. So a deductible to go from $500 to $1,000, that's a cost. Comprehensive is a cost. Bodily and injury, that's a cost. Rental car reimbursement, that's a cost. You can see the cost associated with each one of those line items. So if you know that there's a cost for a $500 deductible, what if I change it to $1,000? How much do I save? If you end up saving $500 a year, right there, it's a no-brainer. Do you live in a state that has hail or has, for some reason, more road debris than other states? I don't know why Colorado seems to attract rocks. All I know is that I feel like at least once a year I break a windshield on almost every car. So you can get deductibles specific to glass. Usually they're about $100 instead of $500. And the cost of glass for some of these new cars can be thousands. But even without that, I don't want to pay a $500 deductible twice a year. And the cost of insurance is sometimes pretty cheap, but very valuable. Same deal here with rental car reimbursements. Sometimes that is dollars for a year. I mean, sometimes it's 10. It's a low cost of insurance and a huge value. Those are easy wins. And then of course there's what I pay. This one is the most expensive vehicle for me to insure. It's a 2015 Lexus LX 570. It has a bunch of miles on it. It's now 11 years old, but new, it was $90-some thousand. And so parts are still expensive. As of a month ago, I was paying $4,400 a year to insure all my vehicles. When you look at your own policy, note they're probably going to show you 6 months. I quoted with Geico last month. They offered me $1,680 for the exact same coverage for the exact same year. State Farm, $2,700. Progressive, $1,252. Now that's a savings of $3,148 a year between Progressive and my current policy. Over 5 years, that's a savings of $15,000 had I just not taken the time to shop. And so if I'm worried about my homeowners going up, I can just leave the 1999 Lexus on the homeowners. The cost savings there was pretty minimal between the two because there's just not that much of a premium anyway. There's not much that's saved. The minivan, for whatever reason, maybe people crash them a lot in my area, there was a ton of savings. And so those, they're getting moved. I'm gonna save thousands a year. This is a small thing you can do that can save a ton. When you look at your bills, insurance in general, probably a large part of them. You have to consider your car, your renters, homeowners, whatever else toys you might have, and then the other ones, medical. Where we can save money on insurance, we can end up with a lot more money in our pocket, hopefully to buy fun cars. Hope we save you some money. Over and out. Thanks for listening. Sorry, my neighbor's warming up his M3. It doesn't sound good at startup. It sounds great when it's running, but